What's up, Business Warroom fam? Welcome back to the show that's going to change the way you think about business, economics, and how this whole crazy world of trade, tariffs, and finance really works. We're digging into the real meat and potatoes today, so you better sit tight because we're talking tariff, treasury bonds, tax cuts, and manufacturing jobs, and the way our global economy works against us. And hey, I'm going to throw in some Brooklyn-style fire to make it all pop. So grab a seat, pour yourself something strong, and let's jump in. So first things first, let's talk tariffs. Now, I know some people are up in arms about them, saying tariffs are bad, they raise prices, they hurt us. But let's break this down. Tariffs are taxes that we put on imports on goods that come into the country from places like China, Mexico, or wherever else. And yeah, there's been a lot of chatter about how these tariffs are messing up the global trade system. But guess what? They're not as bad as people say, especially for you, the everyday working American. You see, the thing that gets lost in the noise is this. Those tariffs, they're actually a revenue generator for our government. You want some numbers? Let's break it down. In 2021 alone, the U.S. government collected over $75 billion in tariff revenues. That's no chump change. And what's it going to do with that money? Here's where it gets good. That cash doesn't just disappear. It gets reinvested. We're talking about funding things like tax cuts, which, benefits you, the middle class. This is where the real magic happens. You see, tariff revenue helps reduce the tax burden on people who are working hard to make ends meet. So while the media is out here making it sound like we're shooting ourselves in the foot with tariffs, the truth is that they're helping finance tax breaks that you and I need. And think of this. When we slap tariffs on foreign goods, what happens? Manufacturers who were previously producing stuff overseas bring it back home. And that's where we get more American-made jobs, more American factories, and a stronger economy. Tariffs aren't the enemy. They're the tool we need to bring manufacturing jobs back to the U.S. All right, let's talk about the financial side of things. I know. Some of you are probably thinking, hey, I don't want to get lost in the weeds with bonds and interest rates, but hang with me for a second. It's important. Trust me. We've been hearing about treasury bonds a lot lately, right? These bonds are basically the government borrowing money from the public. And right now, the price of these bonds is dropping, which means interest rates are going down. Now, this sounds like a bad thing at first, but trust me, it's actually good news, and I'll tell you why. When interest rates go down, it's a twofold victory for us. First, it helps to lower inflation. We all know that inflation's been a problem, right? Prices for goods and services are through the roof. But when interest rates fall, borrowing becomes cheaper. People stop hoarding cash and the economy stabilizes. Prices start to level out. Second, lower rates means less of a burden on our national debt. We're talking about big numbers here, trillions of dollars in national debt. The government's got to pay interest on that debt. But when the interest rates are low, those payments get cheaper. This frees up money for other things like, you guessed it, tax cuts for the middle class. And don't forget real estate, which lower interest rates, mortgage rates drop too, which means, drum roll please, lower monthly payments for homeowners. So whether you're looking to buy a house or refinance, those lower rates are a win-win. Trust me, it's all connected. Lower rates, lower inflation, and more disposable income in your pockets. All right, now let's take a step back. and look at the big picture. For decades, we've been sold this idea that the U.S. economy should shift away from manufacturing and towards a service economy. But here's the thing. That's a big problem. When we stop making stuff here, we put all our eggs in one basket. We let foreign countries do the heavy lifting, and now we're paying the price. It's not just a bad business strategy. It's a national security risk. Think about it. If something happens, let's say a war, another pandemic, or even just a major natural disaster, what happens when our supply chains get frozen? Suddenly, all the things we rely on are stuck overseas, and we have no way to get them. This is why we need to bring manufacturing back to American soil. We can't afford to depend on foreign countries for our most critical goods. It's a matter of national survival. Now, tariffs are a critical part of this strategy. They push foreign manufacturers to either pay up or bring their production to the U.S. So not only are tariffs helping us economically, they're also making sure that we have what we need when the going gets tough. Here's something else that's counterintuitive. For years, we've been told that having a trade surplus when we export more than we import is a sign of economic strength. But hold on to your seat, because that's not entirely true. In fact, a country with a trade surplus might actually be at a disadvantage, and here's why. When you have a surplus, you're not buying enough from the global market. You're hoarding your own resources, and you're not stimulating growth in other parts of the world. That's a problem. Now, on the flip side, a trade deficit can actually be a strategic advantage. You might be asking why. Because it means that your country is actively investing in the global market. You're buying raw materials, new technology, and fueling growth in the global supply chain. In negotiations, it gives you what's called leverage. It also allows you to secure favorable deals and build partnerships across the globe. So all those people out there saying we need a surplus, they're missing the point. Now let's talk about the wealth divide for a minute. The top 10% of people in this country, hell, the top 1% own the majority of the stock market. That's right. The stock market isn't where you and I are making our money. The top dogs, they got their portfolio stacked with equities, bonds, and real estate. 50% of us don't own anything but debt. Credit cards, car loans, mortgages, you know the drill. It's funny you hear people scream about tax the rich and raise corporate taxes, yet they're the same people who turn around and say no to tariffs. Well, let me ask you this. Why is it okay for other countries to slap tariffs on American imports and shut us out of their markets, but when we do it back, they cry foul? It's a double standard, my friends. We're playing a game where other countries don't want us in their markets, but are happy to sell to us for next to nothing. So here's the bottom line. People who are anti-tariff aren't thinking about you. They're thinking about their own self-interests in the global economy. They're fine with globalization because it benefits them and their bottom line. But for the average American, tariffs can help level the playing field. Well, I want to thank you for tuning in to another great episode of the Business Warroom Podcast. Here's the deal. Tariffs aren't the enemy. They're a tool to bring manufacturing back to America, create jobs, and secure our future. Treasury bonds, a smart move to lower inflation and ease national debt. It can be a strategic advantage if you know how to leverage it. And at the end of the day, it's the middle class who stands to benefit the most from this whole economic strategy. So next time someone tells you tariffs are bad, just remember they're working for us, not against us. Stay smart, stay sharp, and always be ready for the next round of the Business War Room. Catch you next time, Business War Room fam. Keep it real, keep it profitable, and never forget, it's our economy. We're in control, and we're taking it back. See you all on the next episode.